Hey, JJ here with The Art of Value. So today I'm going to talk about Micron Technology again. So on episode 99, I'll put the link in the description, I just went through the earnings report that came out the other day. On July the 1st, I talked about it. And the video is called Micron Technology MU Q3 2022 Earnings Outlook and Monash Pabrais Investment Thesis. So check out that video if you want to catch up to that. But I listened to the earnings call, so I'm going to talk about that today because you really get the nitty gritty, the real story in the earnings call. Analysts ask questions, and they do tend to give a little bit more information, and you can hear if they're confident or whatever. And so I'm going to go through that today. So if you're new to Micron, you will learn quite a bit about the company, and if you go back and listen to the other video or podcast too, you'll hear more. You'll learn a bit more. If you're familiar with it, then you'll pick up things new. I'm going to focus on the new things, some new information, hopefully, or current information. But let's go into the highlights. Just first, on the earnings call, they went through the quick highlights, which are in the other video that I did. But they delivered record quarterly revenue with strong profitability and free cash flow. They achieved revenue records in auto, industrial, and networking markets, and SSDs for both data center and client. The NAND business delivered record quarterly revenue, and embedded business unit and storage business unit NAND revenues also hit all-time highs. So I won't go through all of that because generally it was a good quarter. It was a good quarter. It's really the outlook that we're looking at that's questionable. Is there going to be a recession? And, they did have, the share price went down a little bit after earnings, and the reason for that was their outlook. And it said that what they say here in the highlights is consumer demand and inventory-related headwinds impacting the industry and consequently our FQ4 outlook. We remain confident about the secular demand for memory and storage, the attractiveness of our market opportunity, Micron's excellent competitive position, and strong execution capabilities, and our cross-cycle financial model. So that, for me, that's the important bit. That's the important aspect, is their long-term outlook, not a quarter. Secular tailwinds they talk about throughout. And let's just go on. So the technology, they talk about the technology. I won't go through that. It's a little bit technical. It's not necessary in this one. We're just talking about the outlook. So operations, they talk about across the industry, there are cost challenges stemming from supply chain and inflationary pressures. So there we go. That's the kind of the core of where we're at the moment. So they continue to expect our cost reductions to outpace those of the industry this year, driven by excellent productivity improvements in our fabs and the well-executed ramp of world-class 1 alpha DRAM and 176-layer NAND nodes. Okay, I'm not going to go into the technology. So, despite COVID-19 control measures in China that created challenges for the global electronic supply chain, Micron's strong execution enabled record assembly output in FQ3, supporting record quarterly revenue. So record revenue. But outlook is a little bit different. However, these COVID-19 control measures in China impacted our outsourced assembly and test subcontractors and led to some impact for FQ3 results. All right, and then for their end market highlights, I'm going through the presentation here if you're on video, on YouTube or on Spotify video, or on some of the short forms, but this is going to be probably longer than 10 minutes if you're on short form. Actually, I've been putting 5 minutes on short form, but just as a clip, and then if people are interested in going to the full podcast, then you can click one of the links or find the full version. So in market highlights, I'm going to make this big screen because it's small print. So you can see they've got data center, PC and graphics, and mobile and intelligent edge, they call it. So that's mobile and auto and industrial. And so some of these have been weaker than others in the quarter, just because of those concerns they laid out: China shutdowns and possible recession concerns. I don't think they said that, but they had a really good quarter. And I also say that this is one of my largest positions, which is why I'm going into it. And so-called super investors like Monish Pabrai and Li Lu also hold big positions in this company. So, and I think it's got great tailwinds, which is what they talk about. You know, we're not thinking about the next quarter, we're thinking about the next 5 or 10 years. That's what's important to me anyway. So here we go. This is I'll read out the outlook, which is the most important in their presentation. They said industry, the expectations for CY22 industry bit demand growth have moderated since our last earnings call. Near the end of fiscal Q3, we saw a significant reduction in near-term industry bit demand, primarily attributable to end demand weakness in consumer markets, including PC and smartphone. So that's the important bit, and that's what the market reacted to, I think. And so there's weakness in PC and smartphone. This has implications for other companies too. I'm thinking about Apple here in particular. It'll be interesting to see their earnings coming out soon. Is this weakness in the smartphone market? Expect year-on-year C2022 industry bit demand growth to be below the long-term CAGR of mid to high teens percentage for DRAM and high 20s percentage for NAND. Our view of long-term DRAM and NAND bit demand CAGRs is that they will remain unchanged from prior expectations. So longer term, their expectations are for continued growth, and this is just basically saying this is temporary. And so for Micron in particular, given the change in market conditions, we are taking immediate action to reduce our supply chain trajectory, to reduce our supply growth trajectory, planning for reduced level of bit supply growth in FY23, and we will use inventory to supply part of the market demand next year. All right, this approach will enable us to reduce wafer fab equipment capex for FY 2022. So reducing capex, it's capital expenditure if you're not familiar with that, versus our prior plans, and we now expect our FY 23 wafer fab equipment capex to decline year on year. So in the call later on, they said that won't show up till next year, won't show up in the rest of this year. And so Q3 2022 revenue for this quarter was 8.6 billion. So they said revenue was up 11% quarter on quarter and 16% year on year. So good growth there. And performance by technology, won't go into that, but to say that DRAM 76% of total revenue and NAND 73% of total revenue DRAM and 26% total revenue for NAND. So that's the breakdown of their business. The DRAM revenue was up 10% quarter on quarter and 15% year on year. And for NAND it was up 17% quarter on quarter and 26% year on year. All right. And so I'm just going to go back to slide 7 here because I started taking notes here. And what they were saying in the call, that was the presentation. In the call, they said AI, cloud adoption, EVs, 5G are strong secular growth demand drivers, enabling the memory and storage industry to outpace the broader semiconductor industry. So that was the CEO Sanjay's comments on that. And he said the Micron's product portfolio has been significantly stronger. Momentum is in several attractive growth markets. Portfolio shift to higher growth, and more stable markets, more mature. So there's the more mature mobile, PC, and consumer markets. They're focusing less on that and moving to a bigger split to the higher growth data center, auto, industrial, networking, and graphics market. So, and some of these also exhibit more stable profitability. And you can imagine, so if we look at those, the growth in data center and AI, that it's growing pretty well. Even if there's a recession, I think there'll be build out of that, continued build out of that. It's just my opinion. And also, we're thinking of EVs, all of the memory involved. Think of all the EVs and the AI that will be part of that with self-driving as that develops, and industrial networking, graphics markets. Think of, all of that is I could see a good future in the next 5 to 10 years, no matter what happens in the next quarter or two. So data center is the largest market for memory today, they said, and rapid growth of AI and memory-intensive workloads. There we go. Ensures strong growth to the end of the decade. So I've done a couple of podcasts, a couple of episodes on AI in particular, and I'm really kind of bullish on that, obviously, over the next 10 years. And it depends, not everything in it's going to be a good investment, and we don't know what's going to happen, but just as they say, the memory-intensive workloads of AI ensures strong growth. I mean, that just kind of sums it up in one sentence as far as I'm concerned. And corporations around the world are investing in digitization, they say, as well, in general. So they talk about data center QV revenue grew by double-digit percentage sequentially and well over 50% year-on-year. 50% year-on-year for data center growth. Data center and demand expected to remain strong in the second half of this calendar year, driven by strong capex growth, not capex as in from their customers, and but some customers are paring back inventory due to macroeconomic concerns. So yeah, it's a factor. I think we can expect a little bit of a slowdown, especially if there's a recession. Yesterday I did a podcast of Stanley Druckenmiller, famous macro investor, trader really, but who learnt from Soros, and he thinks it's a very high likelihood of recession, and he doesn't know if there's more market downside to come, but he's very likely the recession coming. And he's been, as he said, they've outperformed the Fed over the last 20 to 30 years in their forecasting. So consumer PC demand is being impacted in various ways. Okay, so this consumer PCs is the other kind of problem, the downturn. And our unit sales expected to decline by nearly 10% from 2021. There you go, 10%. Graphics revenue grew at a strong double-digit percentage rate sequentially and year-over-year, and industry performance leader in graphics. They are mobile. Okay, revenue declined slightly year-on-year, but grew for the quarter due to strong customer partnerships and product execution. So I've highlighted this in my notes. It said smartphone unit sales expected to decline meaningfully for the calendar year 2022. Now, I think this is what the market reacted to when the earnings came out. We're projecting to decline by mid-single digits percentage range year on year, well below beginning year single-digit growth. So it was projected to be growth of single-digit, and it's going to be a decline of single digits, so that's it's quite a decline. And that's why I think it's going to be interesting for Apple earnings when they come out soon this quarter. It's going to be very interesting because Apple's had like A+, not put a foot wrong, nothing to be concerned about whatsoever. So it's going to be interesting. We'll see. 5G unit sales expected to grow and reach approximately 50% penetration of the smartphone and unit TAM this year. I mean, that's interesting that I wouldn't have thought that. The 5G unit sales expected to grow and reach approximately 50% penetration of the smartphone unit TAM. So 50% of people will have 5G enabled phones by this year, really? I guess if they know, but I wouldn't have expected that just yet. So I think it's probably, well, yeah, I mean, they know better than I do. Micron is a market share leader in the fast-growing auto and industrial end markets, they say, and Q3 record revenue in both. These markets exhibit a higher gross margin in their growth profiles through the cycle. So they talked about auto for a bit. Auto is contained by growth in auto production. So what auto sector if you're following Tesla, if you're interested in Tesla. Elon's talked about that. Other manufacturers have talked about that for various reasons. OEMs are changing to EVs and new entertainment and data units, though, so it's good for Micron going forward. But I just think auto is going to be a great sector, and considering it involves AI as well with self-driving. So they mentioned the Ford F-150 Lightning and the Mercedes EQS SUV and EQE sedan and the BMW iX1. So they're obviously supplying there. We expect auto markets to have a strong long-term growth CAGR in DRAM and NAND that is twice the CAGR of overall markets in those. All right, see, that's not bad. Our strength is in this market will become increasingly important over the coming years. Interesting. So they talk about industrial IoT, Internet of Things, achieved record revenue in Q3. Notice the record revenue, and I mean, all of these sectors have got great tailwinds. Industrial IoT achieved record revenue in Q3, broad-based growth, tailwinds from secular growth drivers, industrial customers invest in factory automation and digitization, investing in. So Internet of Things, another sector. I mean, okay, we're on to slide 8, so I'm going to move to that on the video. So the outlook, what they said, I've read that on the slide, but they said growth outlook has moderated. Moderation in bit demand, PC and smartphone demand reduction, China, COVID, Ukraine war, rising inflation around the world. Same concerns as pretty much every company at the moment. Macro environment creating caution among some customers, and PC and smartphone customers adjusting inventories. So they say mobile, PC and consumer demand showing weakness. Cloud, networking, auto, industrial are showing resilience. Cloud, networking, auto, industrial are showing resilience. Secular demand trends remain strong. Long-term expectations remain unchanged. So you'll notice that they're repeating things about where the weakness is and the strength. Weakness is only in PC and mobile, and everything else is pretty strong, including cloud, networking, auto, industrial. But some of these could see weakness if there's a recession. I would say that, but I'm thinking long term. I'm thinking 5-10 years out, not the next quarter or two, even if there's a recession. So Mark Murphy, the CFO, went through the performance. He went through, let's see, slide 10 was the revenue. I've been through that. 8.6, performance in technology, revenue by business unit was fine. It's good if you're on the screen there. I'm going to increase that. So computing and networking, you can have a look at that. We don't need to go into that now because that's not for this earnings call. We can look at the actual results. And what else have we got? So talked about FQ3 2022. There's earnings there. Gross margin 47.4%. That's good. Operating expenses 953 million. I'm not going to go through all those numbers. And guidance. Here we are. Guidance. Slide 15. Guidance. Okay, I'm actually going to go back just one because this is important. I think we can talk about their buybacks. I found this interesting. So he talked about they've had buybacks of 981 million in the quarter. So nearly $1 billion of buybacks. Now they've deployed 5.7 billion since 2019, and that's when I started buying in buybacks. Average price of $53. Current price is $53.65, I noted, and my average cost for this is $45.36. So I bought it pretty much cheaper than their average buybacks. And he said MU is committed to returning to shareholders all of the free cash flow generated over the cycle through a combination of dividends and buybacks. Buybacks both programmatic and opportunistic. Personally, I prefer opportunistic given what's happening to the share market, and I think they've talked about by going harder if the share price drops, and they said they expect to repurchase more as the stock trades at a discount to intrinsic value. I mean, they said it right there in their calculation, and that it's trading below intrinsic value, and they obviously think so if they're buying it, around the price it is now. Quarterly dividend approved by board of $11.05 per share, a 15% increase. Now, I prefer not to have a dividend at all. I'd rather just them do buybacks. And Warren Buffett says as much, and that's why, Berkshire Hathaway's never had a dividend. Prefer to buy back stock. That's a better use of capital, I'm concerned, but it's still fine. They're doing both, so that's fine too. Outlook. We intend to walk away from business that doesn't meet our pricing objectives. I like that too, that they're able to do that, and they can do that, and the pricing power, it goes to pricing power that they walk away from business that doesn't the pricing's not acceptable to them. So they're controlling OPEX and CAPEX, and it will be material in 2023. It won't show up this year. Said that already. Okay, slide 15. When they say the guidance, they remain on track to deliver record revenue, solid profitability, and free cash flow in 2022. And beyond the near term, they project secular growth drivers such as data centers, auto, and other areas to support robust DRAM and NAND growth and strong cross-cycle financial performance by Micron. There we go. They repeat that. They are confident about the future. At Investor Day, we laid out the key attributes of the company: strong revenue growth CAGR of high single digits, robust cross-cycle operating margins of approximately 30%, so it's operating margins of 30%, and healthy free cash flow margins that exceed 10% of revenues. We see the current share price is very attractive, and at these levels intend to repurchase more aggressively in FQ4. So this is what you get from the earnings call. Highly recommend listening to the earnings call. So Sanjay, the CEO, says memory and storage TAM is expected to be $330 billion by 2030, and become increasing proportion of the semiconductor market. They think they're executing extremely well in aspects of business that are within their control. So things that are outside their control, of course, are the supply chain issues and COVID lockdowns and recession. All of these things, the war in Ukraine, all of these things outside control. But they think they're in an excellent position to capture the long-term opportunity, navigating through near-term headwinds. All right, now the Q&A, which is often the most interesting, because sometimes analysts don't ask they kind of don't want to annoy the company or the people, so they don't actually answer hard questions. But it's still interesting. And so the pullback from China and cloud customers. Somebody asked about that. Is there a pullback from China in the cloud customer market? They said cloud end demand is healthy, but there is elevated inventory. This is just generally, not just China. CapEx in cloud strong in the industry. There is China weakness on consumer demand. The overall cloud trends are healthy, though. Inventory is higher on the cloud side, they said. And then there was a question about the magnitude of correction of NAND. And so the smartphone market and PC impact. Demand is below earlier guidance, which I've already said, and below long-term CAGR as well. And it's the same for DRAM, and down nearly 10% instead of growth up single digits. I've already said that. I'm pretty clear about that. Amounts to 130 million smartphone units. So there's some more detail on that. So if you're investing in smartphone manufacturers, think about that. Yeah, the amounts to 130 million smartphone units. And similar to PC, they're expecting 30 million reduction from earlier guidance. So there's an adjustment in these two markets. So that will affect other companies out there. I wonder if if investors are aware of this is an early indication. They're making components for these things, right? Memory and storage. Could cloud drop next? Somebody asked. It's interesting. It's an interesting question. Customer capex for cloud continuing to be strong, they said. Inventory levels are higher than pre-COVID. It remains to be seen if macro impacts cloud spending, and we think it will be secularly strong and come back strong if there is a drop. It depends on the macro, how that evolves. So they're thinking long term. Our guidance for China revenue has come down by about 30%, which has caused a 10% company-wide reduction, driven by smartphone weakness, PC weakness, general macro environment weakness due to COVID. China tends to provide economic stimulus, they say, when there's a downturn and after these COVID lockdowns. So they're hoping for that, and we remain optimistic about consumer demand will come back. And they think it's interesting that they say that China will stimulate, where in the US and other places it's going the other way. Excuse me. Perhaps that's why interest rates are going up in the Western countries, and share markets going down. But there's been a bit like I don't know if you've seen, but China tech stocks, some have gone like up 50% in the last few months. From very deep lows, mind you. So on the buybacks, they said, are you considering spending more cash on buybacks because of the low share price? Somebody asked. An analyst asked. He seemed pretty keen for that to happen. The analyst, they're not going to comment on the rate and pace of buybacks, but the balance sheet is very strong. They've got $12 billion in cash, which is above their target in cash. So that implies they will spend more on buybacks this quarter if the share price opportunistic buying. So the leverage is low. They're in net cash position. We're in great shape. We want to maintain cash to focus on long-term business, of course, and we will increase opportunistic share buying. We can purchase at a higher rate in this coming quarter. They said that, and that was the end of the call. There's a few other questions, but not important. Broadly, listen to it yourself if you want to, but they're the key points, and they did reiterate things over and over again, that secular tailwinds, even though there might be some a few minor problems going forward, and this has been cyclical. So part of the thesis is that it's less cyclical, and there's long-term tailwinds here. I can see that. And so that's all for now. If you like and subscribe and follow on your favorite podcast apps, YouTube, of course, give us a like for the algo if you wouldn't mind, and subscribe, of course, to get more of these. And join me on the Art of Value on Twitter. All right, thanks. See you next time.